morning, traders. This is Alla Peters. On December 13th, I received a fantastic question from a student who is asking about stop and volatility. Take a look at this market. Take a look at 1-minute chart. What does 1 minute show you? Very clearly that we are in very volatile markets and volatility will become bigger next year. 1 minute chart stages 5-point formations. What does it show you? That trading with speculative 1, 2, 3-point stop will not work. What is 5 minutes showing you when it stages 13-point formation? That trading with speculative stop will not work. That trading on the rules does. And if you obey and respect volatility and you have multiple charts open, you are in excellent shape. You learn in the course, more charts you have open, more opportunities you have. Student like Brett, who is sharing his success story on the website, has 22 charts open. More options, more trades, less stress. No need to go back and forth. Lisa just started the course, has 3 charts open, asked Santa for more. Amazing thing. Lisa knows more charts are open, less stress in day trading will be. Speculative stop, speculative target, not an option. Take a look on this spectacular reminder this morning and what price did this week. This second week in December, we're dealing with weakness across the board. This proprietary Fibonacci tool showing you very clearly when price dancing between key Fibonacci resistance and key Fibonacci support. This is showing the end of the minor trend. This is showing monitor for short. Do not buy into resistance. Time and time again is played out in the trading room this week. This is showing the end of the minor trend, key support. Do not short this entire week. And this exact same formula that playing out right now on one of the top stocks in US. ExxonMobil looks exact same way as S&P. Both trends are minor. Prices dancing between key support and key resistance. The entire 2018. This is what I recognized in 2008. If I remove all the indicators from the charts, I will see extremely clearly that price action remains the same, that ExxonMobil looks exactly the same as S&P hourly chart. And if you know how to convert this chart to 5 minutes, you see how brutal this Thursday morning is when price dancing in the middle of the trend in spectacular correction. Look at this brutal dance. What is the range on S&P? Back and forth? Magnificent spikes. Look at this dance. Ouch. 14 points back and forth. Market the nasty correction, market in the middle of the trend. Knowledgeable trader knows that. Market dancing at institutional resistance this entire year. At institutional support, 2600 level. The support becoming weaker and weaker, and this week price is showing you buyers are weak. As this entire week, buyers cannot break through the end of the minor trend. Quite a pickle. This is your day trading decisions. You're trading 1, 2, 3, 4, 5, 6, 7, 11, range chart, tick chart. Any chart you trade, if you know where the end of the minor trend is, if you respect the most important rule you learn in the course, you know extremely well. Bullish trend is weak. You remember extremely well, this is not the place to buy. And this Freaky Thursday, prices frozen in the middle of the trend in the worst place to be with endless spikes. Ouch. What a spectacular reminder. Fibonacci is the only natural predictive tool in the markets. If you know where key Fibonacci resistance is, if you know where key Fibonacci support is, you are not surprised for this bullish correction, however it is 100 points big. Look at this reminder. Look at this spectacular reminder. If you want to trade with institutions, never short into institutional support. Ever. Never. If you want to be successful trader, never buy into day trading resistance. Never. Ever. If you respect the most important rule you learn in the course, you understand why market is so nasty this morning. Equal buyers and equal sellers. Quite a pickle. What a dance. Volatility will become bigger and market will become dangerous. As VIX breaking through the end of the minor trend. And when VIX will skyrocket and double and triple this next year, knowledgeable trader prepared. Knowledgeable trader understands that. VIX looks exactly the same as S&P this morning. What is the difference? This is your investment decisions. Every single chart showing bullish weakness. Poor oil cannot break through famous 54-55 resistance. Poor Apple, simply taking a pause, cannot break through key Fibonacci resistance. 160 is lifeline on Apple. Knowledgeable trader knows that. But how Apple sold off despite stunning earnings is ultimate reminder. If trading on the earnings and indicators worked, every single person on the planet would be Bill Gates. It does not. Sell-off on Apple simply taking a pause. As Apple reminded you, just like S&P, when it could not break through 181. Buyers are weak. Exact same identical formula playing out across the board. No matter what you trade. Bullish trends becoming weaker and weaker. Look on poor Amazon. What a lesson this year. Across the board. Only price action in Fibonacci keeps you on the right side of the market. No indicator or news will ever do that. No matter if you trade CVX, no matter if you trade poor CVX sitting at key Fibonacci support at 111, as weak as key support across the board, as weak as key support on Boeing, bullish weakness on all long-term charts. And this is a chart that tells you volumes about markets. Pay attention to this. And remember, as long as this institutional support remains, you cannot short near. but 100 points spikes, 300 point spikes, 600 point spikes is ultimate reminder. As long as this institutional support remains, market dancing in brutal bearish correction. So, no matter what you trade, if you trade Apple, if you trade oil, if you trade S&P, if you trade Chevron, if you trade Amazon, it's all the same. Obey the rules, respect the rules, and never buy into resistance. Never short into support, and pay attention how dangerous and brutal market is this morning. However, if you know the most important rule you learn in the course, as Bradley does, as Lisa does, as Patricia does know extremely well, you are on the right side of the market. What a spectacular reminder this morning. Speculative stops, speculative targets, not an option. Rule-based method, pure price for entry and Fibonacci for exits. Applies to any instrument, any time frame, any platform. And if you respect the rules, you have no heart palpitations, you have no sweaty palms, and you absolutely done chasing indicators. You absolutely done chasing news. Pay attention to this, and the sky's as a limit. No matter if you trade Apple, no matter if you trade Euro, no matter if you trade Pound. You are not surprised. Why Pound staging endless bullish pullback? When Pound crashed through key institutional support. This was Pound at key institutional support that Pound respected for 7 years. Do you remember Pound at 3600? 7 years later, Pound crashed through this support. 2016. Let me remind you, this is exactly where S&P is now. Exactly where S&P been dancing this entire year. Exact same place where ExxonMobil is now. Exact same place where Pound danced for 7 years. It's all the same. The only difference between all the instruments, what instrument you decide to trade. Do you want to trade S&P? Do you want to trade oil? Do you want to trade Pound? Do you want to trade Amazon? Do you want to trade Apple? Choice is yours. Price action remains the same. Only difference, risk management and trade duration time. So when S&P stages these brutal, nasty corrective formations, knowledgeable trader not staring at the screen. Knowledgeable trader values his time and walking away from the screen, not touching the worst place to be, the middle of the trend, when price chopping back and forth in worthless correction. If you want to trade stress-free, like Brad does, as you can see what Brad accomplished in his trading, as graduates all over the world, from beginner to hedge fund trader, trading the method. Brad is having very lovely holiday season. Why? He knows how to trade based on the rules. Brad made serious effort. Brad is not trading with speculative stuff. Brad is not sweating bullets. He only takes a trade when rules are met. Can you do that? And if you can, join us in course that's appropriate for you. And remember, during holidays, we offer 2 additional weeks for videos review. When we will be closed for holidays, every single student gets 2 additional weeks to review videos in member area, to study prior class recordings. Only 2 spaces left at the lowest fee in 8 years for Fibonacci Foundations course, where you master foundations of the method. And if you dive right into mastery, you master all the foundations and complexities of day trading, position trading, long-term Fibonacci trends. And you receive 2 additional weeks, which makes it 14 for additional time video review during holidays. Trading room included, live guided trading included. I'm with students 5 days a week. If we are closing for holidays, as of December 20th, you have plenty of time to review videos during time off. If you want to dive right into mentoring, you have access to all group classes. 6 months course can be extended up to a year. You have access to all group recordings of Foundations and Mastery course. And when we start live again on January 3rd, you are well prepared. So spend your time wisely during holidays. View recordings and prepare for New Year. Identify what course is appropriate for you. And if you have any questions, do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com, even on weekends, even on holidays. I look forward to speaking with you. Any questions? Another excellent source to review thousands of videos on YouTube channel. Pretty please do that. And if you reviewed all the information on the website, I look forward to hearing from you, as knowledgeable trader knows extremely well. When price dancing in brutal correction, this is not the place to touch the market. This is not the place to babysit the screen. Holidays, worst time to trade, best time to learn. Spend it wisely. Learn how to trade less than 10 hours per week. If you obey the most important rule you learn in the course, you are not surprised. When price does this, you're walking away. You are not babysitting the market. Have a joy-filled holiday. Look forward to hearing from you.